Hello everyone and welcome back to another video. It has been a while, so please subscribe. Please consider subscribing. I really am trying to bring you and make the best videos that I possibly can. If you have comments, if you like it, if you don't like it, please let me know, but please subscribe. So I had to get in on this because everyone on planet Earth is in on this. And if you want to hear the audio side of what happened with GameStop in 2 minutes, please go check out my podcast at Pocket Change. That's two words, Pocket and Change. You can find it on Apple, Spotify, Google Podcasts, anywhere you listen to your podcast. Just look up Pocket Change, and it's my latest episode titled What Happened with GameStop. So let's get right into it and let's do the nitty gritty dirty work on what the hell is going on with GameStop. What what is driving this? So we're going to do fundamental analysis today. That's all that I do. I do not do that technical BS. I do not look at charts and look at breakout patterns and read candlesticks. I don't do that. I don't like that. I think it's really dumb because I don't think it's a really great way of, valuing a company and seeing where it could go in the future. It's just much easier to do fundamental analysis. So as we can see here, based on 5 price targets, GameStop from TipRanks has an $11 price target. That's almost 97% downside from where it is right now. This means that at fair value, realistically, based on the fundamentals, analysts think that it is a hold or a sell, and it should be around $11. That's what it's really worth. Again, based on fundamental analysis. The stock analysis from TipRanks lists it at a 7, and that again is based on the fundamentals, not because of the momentum or the swings. So let's actually go down here. I've never really clicked on this with you guys before, but I have seen it. You can actually see what are the largest hedge funds that own GameStop. And this is a really interesting feature of TipRanks. As you can see, there aren't, this is only like about $18 million, but there aren't that many hedge fund managers that have owned GameStop over a long time. These are new positions that all these people have put into their portfolio, and what percentage of the hedge fund's portfolio is it in? So these are all the people that are currently in it. And I don't have a premium account, so I can just see this on the surface, but that's really interesting. You can see. So now let's get right into the income statement of GameStop. As you can see, from 2015 all the way to 2020, GameStop has been sporadic. It's been going down, up, down, and down again. So this is a mixed bag. In 2020 was one of the worst years. Obviously, 2020 was a bad year for everyone, and especially GameStop. They didn't really even open their stores at all throughout the pandemic, and they were really slow and late to the party with trying to sell stuff online and pushing online sales because not that many people want to buy a disc online when you could just honestly just log onto your system, your PS5, your Xbox, and just download the game right from a game store. So this makes sense why it went down. And this is one of the biggest reasons why hedge funds made their short positions in GameStop. It's all because GameStop is a dinosaur and it's just a dying breed. It's not going anywhere. They're not innovating. They're doing nothing new. It's the same old stuff, and there's not much hope for them. So most people would think that this business is just going to continue to go down, maybe even more drastically in 2021. So why not short it? And that is how we got to where we are today, because GameStop was shorted basically all throughout 2020. But then January 2021, the Wall Street Bets gang found a way to squeeze those shorts. So the big short squeeze that happened over this past week, and it was incredible and magnificent. Anyway, that's just a top line revenue. Let's go down and look at their net income. As you can see, they were profitable all the way up until 2018. 2018 was the last year they were profitable. They were negative in 2019 and 2020. So GameStop was technically losing money. And now let's go to the balance sheet. And in the balance sheet, we're going to see, what is the working capital and what is the debt and how much cash do they actually have on hand. All very interesting things. So as you can see, the cash pile again is a mixed bag. It was went down and then it went up, and then went up again, and then went up again, and obviously it went down because they had to spend a lot of money, almost $1.1 billion during the pandemic to kind of recover and keep themselves afloat. So they do have a positive cash pile of about almost $500 million. So their total current assets is 1.6 billion, and then their total current liabilities is about 1.2 billion. Their positive working capital, that's really great. That means that if it comes to solvency time, they're solvent, they're not insolvent. So they're not going to go under right away. They have some wiggle room to make deals and to stay alive. Also, they have, total assets of about 2.8 billion and total liabilities of about 2.2 billion. So looking at their total long-term liabilities, look at this. They have about 419 billion dollar, sorry, not billion, $419 million in long-term debt. So this is the most important thing. Like what do you owe people right now? And as you can see, they've actually been paying down their debt to get it almost halved in about 2 years from 2018 to 2020. This is a big deal because Jim Cramer actually mentioned on his show or in a tweet or somewhere that GameStop, if they wanted to right now with this cash pile, they could actually eliminate their debt. And they have some wiggle room to do that. So that would have been a huge thing because now GameStop doesn't have to answer to anyone necessarily, and they're not going to be paying unnecessary interest costs. Or I'm sure it's high interest because people that own their debt probably are like, well, wait, you're in a failing business. Your revenue is going down. Like, we're going to charge you like a credit card, something, I'm just making this up off the top of my head, but 16 to 20% on your debt. So that's a huge thing. Why not just pay it off and then you're in a great position to keep anyone from, coming at you like a vulture. So that's really interesting. And now let's go to the cash flow statement. Obviously, we saw that GameStop has a negative net income, so that's always where we start with a cash flow statement. And as we can also see, they have not been doing any acquiring really, but they have been doing long-term debt repayments. Like I said, they basically cut their debt in half from 2019 to 2020, which is really good. Someone in the finance department is paying attention at GameStop and saw the writing on the wall and said, we don't want to have almost $800 million in debt in a pandemic when we could easily pay that off, at least half. So they have been consistently repaying debt, and they have not really been doing too much new debt issuances. They've not issued more long-term debt. This is the smartest thing right here. This is blank. This is a really great thing to see. Again, someone in the finance department at GameStop is paying attention. They did not issue any new debt when they could have very easily in 2020. Instead, they paid it off. So that is a huge, plus mark for GameStop. So this is a really great thing to see. Yes, they're negative cash flow positive. Like they're not cash flow positive, and it's been again another mixed bag. So but in the end, GameStop is not horrible as far as the fundamentals go. They're not sound at all, but they're basically a little bit above break even. They could be a lot worse off. Let's just say that for this type of company with this falling revenues in 2020 could have been a lot worse off, and it could have disappeared a long time ago, like a Blockbuster, like a Radio Shack. GameStop has somewhat stayed relevant, which is one of the reasons why there was such positive news in swings going back to even September 2020. So now let's see, this is the craziest part. Let's see what a portfolio of GameStop looks like if you had invested in GameStop at its initial public offering back in March 2002, what you would have with $10,000 invested, what you would have by January 2021 would have been almost $1 million. So let's see what this means. So it's about a 28% compound annual growth rate, which is amazing. That's like up there with like Microsoft and Apple as far as if you had invested during the same time period. But let's see this. Ready for this? Annual returns. It's not bad. That's some pretty good growth right there. And then all of a sudden it just completely drops off and, falls off 65%. That's not what you want to see. But then it has, again, some more good growth years, including 100%, 102% in 2013. Well, that's incredible. But then for the next 1, 2, 3, 4, 5, 6, 7 years, GameStop basically fell. And that, you go from 107,000 to 18,000. That sucks. That's not what you want to see. That's a horrible return on investment. You just keep losing and losing and losing money until, the shorts come in around 2020, later in 2020. And that's when Wall Street Bets, like I said, picked up on it and the stock soared. I'm sure this is more towards the end of 2020, but 209% for the year. And then you see almost 1,600% for 2021, which is only, like it says, annual return for 2021 is from 1/1 to 1/31, 2021. So just in this month, GameStop is up 1,600%. So you'd make 17 times your money in 1 month. And you would have gone from $57,000 at the end of 2020 to almost $1 million at the beginning of 2021. 1 month into 2021, you would have seen 17 times your investment from where it stood. That is so amazing. So, I mean, that's incredible. And again, none of this is investment advice. I am not, registered. I'm not certified. I'm not a lawyer. I'm not a financial advisor. None of this is investment advice. This is all just like, to show you what these numbers look like if you wanted to look and see what they look like on your own. I'm not advocating for anyone to invest in GameStop. I am not investing in GameStop myself, but here's just what's behind it. What are the behind the scenes look of the fundamentals? What's under the hood of GameStop? And this is what you get. A pretty mediocre company that's absolutely not worth, as of right now, $325 in my opinion, and the opinion of like analysts that say it should be $11. So anyway, hope that this, made some sense to you. Hope that you enjoyed it. And yeah, let's just see what GameStop does. It's funny to see, all the momentum that's gone into it. So again, please subscribe and check out my other videos. Thanks.